I hope you enjoyed the video and would now appreciate if you subscribe to the channel. It is essential to understand the numerous strategies offered to you should you plan to make investments in real property. The three most popular strategies: buy and hold or leverage, and land investment. Each one has its advantages and disadvantages, so you are able to choose the ideal one that suits your unique circumstances. The best strategy for real estate investing is to buy and keep. The buy and hold estate investment strategy involves buying and holding an investment property over many years. The property doesn't need to be sold if the property in certain time frames. This is more focused on making money from rent you earn, so it is important not to pay more for the house than what you are able to let it for. To establish realistic expectations for your property, it's important to take into account certain aspects. One advantage of buy and hold is the growth it will bring. It's likely increased when it's situated in an area that is a good one. Be aware, however, that selling the house will cause a decline in its worth. To reduce these costs, the best option is to purchase a house that will generate cash flow. A buy and hold strategy has another benefit. You don't require prior experience or knowledge of investing in real property. You can use real estate tools to get more information about the real estate industry and finance. These tools can help you locate the perfect property and place to buy and keep. Buy and hold also gives the possibility of earning rent that can be used to pay off the principal loan. There is the potential to build large amounts of equity with this strategy without the need to dispose of your property. It can also protect yourself from the rising cost of inflation and is an excellent option for long-term investment in real estate. The buy and hold strategy for investing in real estate can work well in different markets. A buy and hold strategy is an excellent option for those trying to find a turnaround apartment construction. Additionally, distressed properties can be among the least costly to buy. Before you purchase a rental property, you must determine what you're able to pay for the mortgage, interest, as well as the upkeep of the property. You will make income by renting your property out, but you must also budget for tenants' turnover. Also, you should have plans in place to oversee the rental property. Leverage is a key component of real estate. Leverage is an investment technique that will boost your investment return. It is important to note that this method should not be utilized without careful analysis and due care. It is the most dangerous aspect when using leverage. If you are in default on your payments, you can be forced to cut your earnings and also incurring additional costs. A lender can also foreclose your home and pursue your assets. This could damage your credit score, making difficult the ability to qualify for future loans. Commercial investors often employ leverage when buying real estate. It involves the deposit of the smallest amount, like 20% of the amount to purchase. If, for instance, the property's value is $500,000, the buyer can buy the house by paying only 20% of the amount. The rest of the money can be borrowed. The investor is still responsible for an amount of interest. One of the most common ways to invest is through leverage. Although it does have its advantages and disadvantages, investors in real estate should use cautiousness when applying leverage. It is certainly possible to improve returns by using leverage. You should always be cautious before applying it in your real estate portfolio. The leverage can increase the risk. There is a chance that you will end up having excessive debt if your whole money is going to an investment property. The leverage is a property strategy that can make it easy to acquire more investment properties. It's crucial to note that using too much leverage can cause low cash flow and more regular mortgage repayments. However, this strategy could yield greater profits if you do it correctly. Make smart decision-making decisions regarding investments. Take into consideration the mortgage payment, vacancy rates, and a volatile economic situation. Leverage is a real estate technique that will allow you to diversify your portfolio and create an income over the long term. Leveraging your real estate portfolio is a strategy that requires thorough research as well as large down payments. Furthermore, the process could be lengthy. This is why it's a good idea to use the services of a Toronto property management company to aid you in the process of investing. The rental of properties can be a great option for investing. There are many benefits to invest in rental properties. In the first place, they offer a passive income and allow you to build equity. They are also a good source of tax advantages. Additionally, they offer the chance to make a substantial sum while taking advantage of an appreciation of the price. If you do decide to venture out and buy a rental property, think about the potential risks. If you're seeking higher yielding income, this investment may not be the best option. It will not provide you with enough income from rental to pay for your expenses over the long term. In addition, you may not be in a position to diversify your investments and will also hurt your overall returns. To avoid making mistakes with renting properties, it is essential to examine the market in depth. For more information about the local area, neighborhood, and prices of real estate, you should make it a point to visit the area at least once a weekend. Furthermore, you need to know how to estimate the costs of a month, mortgage payment as well as interest and maintenance expenses as well as other expenses. You should also consider where you are renting and the type of property is it. It is a large capital investment and is often coupled with mortgages, creating large liabilities. It is crucial to take the proper steps right from the start. Investors who have no experience in real estate often suffer from bankruptcy. This typically is the result of inexperienced mistakes. This strategy is often used by investors who are new to investing and are inclined to let houses. They can also opt to buy and keep, which means that they buy a rental property and keep it over a longer period of time. It's a method you can rent it to tenants as well as earn some income. While investing in rental properties may not be for everyone, however, it could be an excellent option to achieve being financially secure. You can focus your research only on the property itself without worrying about how to manage it. If you're a beginner, buying turnkey rental homes can be the right decision. There are also professionals for help in the management of rentals if you're not comfortable handling the details. Investment in land is a good investment. Real estate investors can reap many benefits of investing in land. You can earn a good return on investment, and you'll be just limited by your imagination and the regulations for zoning. Just like any real estate investment, it's going to need to do some research and work hard to guarantee your success. But if you follow a couple of simple rules that you will be able to reap the maximum benefit of your investment. Prior to making a purchase before investing, it is important to ask yourself the following questions. What is the location of the land? It is the primary element. It will determine if a plot is profitable or it is not. An area that is large enough to accommodate several families or being off-grid could appeal to you. There are many factors to take into consideration when choosing your location prior to deciding if it is possible to construct things. Moving around the areas that you would like to develop is an excellent option to identify land that is available. Check the tax records of your county for information on whether there are any vacant land. In some areas, landowners have to sell their property because they have a large number of taxes. The information available is generally available to the public, and it is possible to locate these homes. It is a good investment for newbies because of its low cost of entry. However, it could be expensive if purchased during an unsuitable time. If you've got an investment plan that is right for your land, you can make the most of the bargain price and build on it, increasing the value of the home and also increasing your returns in your investment. Land appreciates over time because it is in a limited supply and increasing demand. It is a scarce resource and developing rapidly. Land is highly valued. If you are investing in land, don't expect to receive long-term loans. Hope you enjoyed the video and would now appreciate if you subscribe to the channel. Also, join our newsletter for free additional tips and gifts. Also, enjoy these tips about real estate. Investing in real estate. There are numerous benefits of the investment in real estate. It's not linked to other asset classes, such as stocks. It could be incorporated into portfolios to help reduce fluctuation and enhance the return per unit of risk. This can be a fantastic protection against the effects of inflation. However, it can be expensive and needs perseverance and a sufficient amount of sources. The investment in real estate can provide a number of opportunities for leverage. This means that you can borrow money in order to buy more homes than you would with the funds you own. In the stock market, it is mandatory to pay for total value at time of purchase, but by investing in real estate, you are able to borrow less percent. Margin buying is also referred to as margin investing, purchase and selling properties. It is essential to take into account several aspects when buying or selling a property. The first is to determine what price the purchaser will be willing to pay for the property. It is also important to ask to provide a copy of every document related with the house. This way, you can form an educated opinion about the worth of the property. Consider your location when you're considering the property which you're selling or buying. The property's value will be reduced value if the property is near an expressway or a busy streets. Leverage in real estate. Real estate leverage is a technique that allows investors to borrow money in order to invest. Investors can use this technique to purchase property beyond their financial capacity and increase their investment return. Real estate leverage is usually obtained through loans or mortgages. While it is a great way to boost return, however, it's crucial to be aware of the fact that it could be a negative impact as well. Utilizing leverage to purchase real estate could increase the value of an investor by increasing the income they receive from rental. Furthermore, it decreases risk. With no leverage, the money you invest in a property may perform badly and cause loss. With leveraged investments, properties provide income even in the event of a failure. The tax benefits of investing in real estate. A real estate investment can bring many tax advantages, such as the possibility to claim mortgage interest deductions and property tax write-offs. Furthermore, many investment properties qualify for deductions from depreciation and other operating expenses. The expenses, even though not being tax-related at the time of their look, will help you save a lot of money over the long term. Refinancing is another option to receive tax advantages. Refinance refers to swapping an existing mortgage for a loan with a lower rate. The new mortgage provides new money at lower interest rates. This lowers the amount that you pay each month. Investing in real estate. Don't do this real estate strategy.